Recently the pound has picked up somewhat again, but new turbulence is already looming because Brexit from the EU without a deal is more likely. The currency is degenerating more and more into a game ball of the markets. The status of currencies, no matter how long and venerable they look back on, is not set in stone. The duel between hedge fund billionaire George Soros and the Bank of England testified to this in the 1990s. Ultimately, Soros won, and the British pound tumbled far downhill. Now the currency, which is over a millennium old, is again facing turbulence and may even lose its status as one of the leading Western currencies in the end. The main reason for this is Brexit, which should help Britain to regain its old strength, at least according to the arguments of its supporters. In the meantime, the pound is stabilized again. After the slump in late March, the value rose again above €1.14. Since then, however, Brexit concerns have been eating away at the course. Most recently, the pound was only worth €1.10. €1 thus cost 91p, a trend that has continued for years already. Even before the Brexit vote, the pound was still a good €1.40. In the early 2000s, even just under €1.65. I remember at the time when I was living in the UK that it was quite expensive for me. In the Corona low, even parity with the euro seemed likely. At that time, the pound dropped to a rate of €1.05. This volatility is enormous for a currency and shows how the pound deteriorates into a market ball and even falls back to the rank of an emerging market currency. Bank of America analysts recently came to the same conclusion. According to the experts, the depth of the pound market actually speaks against such fluctuations. But that was not the case recently, and we believe that Brexit will change investors' view of the pound over the long term, the analysts wrote in a comment. The reason given by the currency experts is a slump in liquidity. For every asset, including currency pairs, the rule is the more liquid the market, the smoother and less volatile trading is under normal circumstances. Low liquidity favors wild swings, and there is often an overhang on one side of the trade. Few buyers meet many sellers, or vice versa. If the buying and selling ideas are still far apart, there are volatile prices. Bank of America analyst suspects that the liquidity of the British pound market will deteriorate further by the end of the year, the end of the Brexit transition phase. The pound is therefore less like a G10 currency and more like the currency of an emerging country. The experts also point out that the country's debt situation is increasingly similar to that of an emerging country, with enormously high deficits in foreign trade, which tend to speak for devaluation. Commerzbank currency analyst Tu Lan Nguyen is similarly pessimistic about the pound. Over the year, performance is one of the worst among the G10 currencies. The big factor for this is, also in Nguyen's view, Brexit. Great Britain no longer has much time to negotiate a deal with the EU for the period after the transition phase. The transition period will end at the end of this year. In theory, the two sides could have agreed on an extension, but the British government missed the June deadline for the corresponding application because it was out of the question to delay the exit from the EU internal market any longer, notes Nguyen in their analysis. The problem with this, negotiations for an agreement after this phase come to a standstill. An agreement on an agreement by the end of the year is therefore increasingly unlikely, said the Commerzbank expert. Without a deal, it will be uncomfortable for the British. Without such an agreement, trade would take place next year according to WTO rules, which would be a bitter cut for both sides in the real economy. But above all, for the British economy, the EU is the much bigger trading partner than the other way around. Nguyen said that the market had previously believed in the government's bluff under Prime Minister Boris Johnson. An indication of this, last year Johnson has made a sacred promise that the UK would leave the EU at the end of October. Then, at the last second, he applied for a postponement of the exit date to the end of January. It is therefore not a mistake to simply assume that the British are undertaking political maneuvers in order to exert pressure. Now, says Nguyen, the market is no longer sure whether Johnson will prevent a no-deal Brexit at any cost. Preparations for hard separation are already underway. According to EU Chief Negotiator Michel Barnier, the capacities for custom controls are being built up, while Britain wants to give companies another 6 months before duties are due, said Nguyen. Overall, the expert sums up, the chances of a deal or at least a partial agreement are still high. Neither side is interested, especially in the current situation, of separating without a free trade agreement. Nevertheless, the likelihood of a no-deal Brexit has increased significantly, he says. For this reason, we forecast a persistent weak pound in the short term and only a very moderate recovery later in the year, adds the expert. The forecast therefore see the pound in September at the current level of 90p per euro. In the coming year, the pound should make up some ground again, so that by the middle of 2021 a euro will only be worth of 87p. But these forecasts do not come without a warning. In fact, there is a high risk that the pound may experience significantly more severe setbacks than our forecasts suggest due to increasing Brexit risks. According to Nguyen, the threat, especially at the end of the year, is when the UK finally leaves the EU internal market. And there's then increased volatility in the exchange rate. It also seems clear, if, despite all efforts, a deal is not reached by then, Nguyen's forecast would be invalid. Then the pound would probably fluctuate even more and finally lose its status as a stable hard currency. It remains to be seen whether this will really happen. Further indications of the fate of the agreement should not be long in coming. However, both sides are still negotiating on increased speed. And if you now want to know more about European politics from a German point of view, YouTube has chosen another of my videos for you in this end screen, right next to your chance to subscribe to my channel if you haven't done so yet. I'll see you in my next video. Click and enjoy. Viel Spaß!